Welcome to the deep dive. Today, we're really getting into a core idea in investing. Consistency is key.
It's fundamental, really.
Absolutely. And we're drawing our insights from The Disciplined Path to Investment Wealth, a great source that takes this idea, the steady approach, beyond just advice, makes it seem, well, foundational.
It truly does.
So, for you listening, our mission today is pretty clear. Let's unpack why being consistent isn't just, good investing, but often actually better than those big, flashy, high-risk moves we sometimes hear about. Okay, let's unpack this. What does consistency is key truly mean for your financial journey? And why does it matter so much? So, something that jumped right out at me from the source was this maybe slightly surprising claim that small, regular investments often outperform risky one-time bets.
Yeah, that can sound a bit backwards, can it? Especially with all the noise out there.
Exactly. It goes against that whole get-rich-quick story. So what's really going on there? What's the thinking behind that?
Well, it's interesting because the secret, if you want to call it that, isn't flashy at all. It is the consistency. The book talks a lot about dollar cost averaging.
Right.
So instead of trying to, perfectly time the market and dump in a big chunk of cash,
Which is basically impossible.
pretty much you just invest a set amount regularly, like clockwork. So automatically you end up buying more shares when prices are down and fewer when they're up.
Okay, so it smooths out the ride.
Exactly. It smooths out that volatility.
Yeah.
And crucially, it helps take the emotion out of it. We humans, we tend to panic or get greedy.
Buy high, sell low, the classic mistake.
Precisely. Consistency helps fight that urge. Plus, it means you stay in the market. You don't accidentally miss those really good days, the best days, which statistically account for a huge chunk of the long-term gains.
Right, missing just a few key days can really hurt your returns over time. Okay, so it's about taking emotion, that timing pressure off the table. But the source also hammers home this idea of learning to ignore short-term noise and needing to stay disciplined through market ups and downs. What is that noise we're supposed to ignore? And let's be honest, why is that so hard?
Oh, it's everywhere.
Yeah.
The noise is those screaming headlines about the market dropping 2% today or surging tomorrow. It's the constant chatter on financial news,
Yeah.
the hot stock tips someone gives you.
Yeah, the stuff that makes you feel like you have to do something right now.
Exactly. It pushes those emotional buttons, makes you want to pull your money out when things look scary or jump into something just because it's going up fast. The book says success follows those who persist. And that persistence is largely about not reacting to that noise. Most people do react. They get swayed, they tinker, they interrupt the very process that builds wealth. Discipline here isn't about being rigid. It's more about emotional resilience, sticking to your plan even when things feel chaotic.
Emotional resilience. I like that. Avoiding that roller coaster. Okay, here's where it gets really interesting for me, and probably for many listeners. How does this steady, disciplined thing actually build the wealth? The source talks about the magic of compounding, the eighth wonder of the world, right? How does consistency unlock that?
Ah, yes, compounding. It's beautiful, really. If you are consistently investing, even small amounts, and you're ignoring that short-term noise,
You're letting it work.
you're giving compounding the fuel it needs. See, compounding, like the book explains, isn't just your money-earning returns. It's those returns starting to earn their own returns.
Okay, the snowball analogy. Yeah.
Exactly. It's like that snowball rolling downhill. With each turn, each consistent investment, plus the returns it's already generated, it picks up more snow. It gets bigger, faster, exponentially.
Not just adding, but multiplying.
Precisely. Your modest efforts, as the source puts it, they start working harder for you over time. They really do turn into meaningful wealth. And what's fascinating is how, fundamentally simple it is, yet so incredibly powerful if you just let it happen. Stay the course.
It really does shift your perspective on wealth building, doesn't it? The source makes it crystal clear. That reliable path to, significant financial growth, it's probably not that one lucky high-risk bet.
Unlikely.
It's built on that steady commitment.
Yeah.
Regular investing, patience, discipline, letting those small steps add up and multiply. So if we boil down our deep dive today, the main takeaway is this. Consistent, disciplined, long-term investing, even if it feels like small amounts, it's a seriously powerful, proven way to build wealth. And the engine behind it, it's harnessing that incredible force of compounding.
Absolutely. And that, it actually brings up a bigger question, maybe something for you to think about after this. Well, if success follows those who persist so clearly in investing, where else? Where else in your life could applying that same consistent, disciplined effort lead to surprising, meaningful wealth? Not just financial wealth, I mean.
That's a great question.
Think about skills you want to build, relationships, maybe your health, personal growth. Where could that patient, steady, day in, day out effort unlock something truly significant, maybe even exponential results, just like compounding?
Wow, that's a powerful thought to leave people with. Definitely something to reflect on. Where else can consistency transform things? Well, we encourage you to mull that over. Thanks for joining us on the deep dive. Until next time.